Hi, thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We get into discussing on a daily basis what's impacting mortgage rates. Sometimes it comes from an economic calendar or a mixture of the two with headline news or geopolitical. But sometimes even the market sentiment changes and it can create a lot of confusion out there as good news is now bad news and can be also vice versa. So we try to give the explanations of what's going on with the markets and hopefully give you the information you might be seeking. A little bit about myself is I am a loan officer. I do work with the national lender. We lend in all 50 states. So if you have any questions or we could be of any assistance, please feel free to reach out. We'd love to help you out with the refinance or purchase needs. But more than that, we'd also like to be a resource for you folks. So if you guys got questions about anything, again, please feel free to reach out. In the meantime, we'll jump right into it. We'll start off with the economic calendar for today. This week we got jobs data for the month of May as we wrap up May here. Tomorrow we'll see the private payrolls by ADP. And then we'll get the initial jobless claims we get every Thursday. And then Friday we'll get the Bureau of Labor Statistics non-farm payrolls along with unemployment rate. So stay tuned. But today we get the what we call HPI's home price indexes. We got two of them today. The first one is the Case-Shiller Home Price Index. This is basically based on 20 of the largest markets in the U.S. And as you can see here, month over month, it went up from 2.4% previously. Forecast was supposed to slow down a little bit at 2%, and it came up 2.4%. So year over year, if you look at year over year, it went from revision last month in February from 20.2 down to up to 20.3. Forecast again thought it would drop a little bit to 19.9, but it went upwards to 21.2. And then we got the FHFA. This is basically homes with the conforming loan limits or conforming loans and around the U.S. And this went up month over month, went from previous month in February at 2.1%. That was actually revised a little bit lower to 1.9, and that actually went up at 1.5%. So its year over year went from 19.4, which was revised slightly lower to 19.3, down to 19%. So some homes we're seeing a little bit of a contraction, or not really contraction, but smaller appreciation levels, we'll say, than others. So the more urban areas, I guess, you're going to see with the Case-Shiller indicating we're still seeing a big spike in there, even though mortgage rates have been climbing. We're still seeing home prices exceed that. Whereas conforming limits, even though we got that in urban areas as well, but it's more spread out. We're seeing that not rise as much. Now let's take a look here at the Chicago PMI. This is basically measures manufacturing in the Chicago region. It went from 56.4 back in April to forecast count 55, and it went upwards. So it increased to 60.3, which is obviously very good. Anything above 50 is considered expansion, and that one, of course, had a pretty big spike. Last but not least, we got consumer confidence for the month of May. So back in April, it was initially at 107.3, but it got revised slightly higher to 108.6. However, forecast was supposed to be a dip down to 104. It did dip, but not quite as forecasts were calling for at 106.4. So kind of mixed bag there. Home prices, of course, we're still seeing that, which is good news. People are still seeing home values rise. Manufacturing increased in the month of this month for Chicago region, and then we got consumer confidence. People are still feeling pretty good for the most part here. Now let's take a look here at mortgage-backed securities. Mortgage-backed securities are down quite a bit. We were down about 50 basis points, 52 basis points at one point, as you see here with the lower we call it the candlestick right there. It's with the wick. It's pulled up a little bit since then. But right now we're down 41 basis points. So what does that mean? Rates did worsen today compared to what we saw last Friday. As you saw here, we are testing the 50-day moving average. So it's kind of a little pullback, so to speak, and kind of allows us to be more of a sideways pattern here. But we're still above the 25-day moving average, which is good news here. Now, what's driving the data today? We do got, of course, a couple of economic data here, but China is starting to reopen a little bit, so they're kind of lifting some of this. They're kind of lifting some of their cities like Shanghai, and so therefore, of course, we're starting to see some factory activity improvement over there, and of course, that is good news for the most part in the economy. Uh, but we also saw in the Eurozone, EU reporting that they have the inflation was really high, spiked quite a bit, so that is raising a bit of concern. Uh, and of course, now they came out with agreement where they're going to be phasing out uh, a big component of gasoline buying oil from Russia, which is, of course, leading to a higher spike in oil price per barrel. Now that, of course, that's not good news because that is inflationary data there, and that now is up to about $118 per barrel. Now that had a bit of a spike in there. So basically, what they're agreeing is that they're going to try to reduce their amount of purchases from Russia in terms of oils there uh, as a result. So this is kind of what's going driving the market today. Stock market is down, and of course we see this down. So basically, investors for the most part are pulling money out of both markets and trying to decide where they're at. Last week was a good week for stocks. However, this week being a short week, it's not starting off that way. So we'll wait and see. And when we also had some comments made by the Fed member Waller, he basically said that he's in favor of half a point increases until inflation comes down. So he's was pretty hot, fairly hawkish. So that kind of adds some juice to the fire, so to speak, in terms of where the market's at today. So a little extra hawkish talk there. Then 10-year treasuries did spike quite a bit here. We did, again, after touching off the 50-day moving average down here as well. It spiked upwards, and now we're up at about 2.84 after being as low as like 2.72-ish range last week. So right now we did spike up to 2.84 right now. Last but not least, we'll touch on what's the average rate for conforming limit on in the U.S. here. The 30-year is now at 5.25, and the 15-year is at 4.72. So, and these do have points built into them, so that's why you're not seeing these based on the eighth in 1/8 increments there. If you guys got any questions about anything or even want a rate quote, we're here to help you guys out, so please feel free to reach out. If you guys like these videos, please help us out and smash that like button and share us. We greatly appreciate that if you guys can help us out there. Again, we're here to help you guys. If you guys have questions, please reach out. You guys have a great rest of your day. Thanks so much for watching. We'll get back to you guys in tomorrow's video. Bye-bye.